Good afternoon. My name is Susan Moyles, and today I'm presenting on behalf of Jennifer Bauer, Charles Klausner, Louis Sheena Fulmer, and myself. And we're going to be talking about Starbucks coffee, financial accounting. What is accounting? Accounting is a practical quantitative measurement system that collects, analyzes, and organizes financial data. This data helps companies make present and future business decisions. There are four main areas of accounting: bookkeeping, a systematic collecting of financial data; financial accounting, a highly regulated method of producing external data, including income statements, balance sheets, and cash flow; managerial accounting, a means of producing internal detailed analysis about pricing, margins, budgets, and competition so that leaders can create a financial strategy; and tax accounting, calculating the amount of taxes a company has to pay. In this presentation, we will focus on Starbucks financial accounting, reviewing their income statement, balance sheet, and statement of cash flow. We will also look at the SEC 10K statement on record. The income statement of a company is one of three major financial statements that show a company's financial health over a specific period of time. The income statement shows revenues minus expenses to report the net income of an organization and provides insight into the company's operations, efficiency, performance relative to competitors, and highlights underperforming sectors. The equation used for an income statement is net income equals total revenue plus gains minus total expenses plus losses. On our slide, we see a comparison of income statements for Starbucks from fiscal year end 2015 through fiscal year end 2019. We can see here that although revenue is increasing, expenses are also increasing, which is resulting in a slowing rate of gross income growth. Next, we will look at Starbucks' balance sheet. A balance sheet shows a company's assets, liabilities, and shareholders' equity to give us net assets. The balance sheet reports what a company owns and owes, as well as the amount invested by shareholders for a particular point in time. In our slide, we have a comparison of Starbucks balance sheets from September 29, 2019 and September 28, September 30th, 2018. September 30th happens to be the end of Starbucks' fiscal year. A quick comparison of these 2 years reveals a decline in assets, an increase in liabilities, resulting in a shareholder deficit. The warning sign in this balance sheet is the deficit in retained earnings in fiscal year end 2019, showing that the company is losing money. The Statement of Cash Flow, or CFS, is a financial document that shows the amount of cash and cash equivalents that enter or leave a company. It is a testament to how well or poorly a company manages its cash assets and reflects the company's ability to fund its operations and pay off its debts. It is an important document that investors can refer to in order to get a picture of the financial management and stability of a company. Along with the balance sheet and income statement, the statement of cash flow is a required portion of a company's total financial reports. The CFS differs from these two documents in that it does not show the amount of future or incoming or outgoing cash as a result of purchases made on credit. Cash flow can be calculated using the direct cash flow or indirect cash flow methods. The direct method adds up all cash payments and receipts, and is calculated using the beginning and ending account balances of the business. The indirect method calculates cash flow by using the net income from the company's income statement. This method accounts for cash when the income is earned rather than when the payment is received. This slide shows Starbucks' statement of cash flow fiscal year end 2019 and 18. Investors use this statement to decide on the viability of the company, generally referencing the last line, the free cash flow. If a company's cash generation is positive, it's a strong indicator that the company is in a good position to avoid excessive borrowing, expand its business, pay dividends, and weather hard times. While a comparison of Starbucks fiscal year end 2018 with fiscal year end 2019 shows a large drop in free cash flow, comparison of a longer period of time shows that Starbucks' free cash flow is growing steadily. Once a company is publicly traded, it must file with the SEC, the Securities Exchange Commission. The SEC 10-K form is one of the most detailed and comprehensive reports filed by a publicly traded company. The form is annually filed to the Securities Exchange Commission and shows the company's financial performance over the course of the year. The form provides transparency for investors so that they can make an informed decision prior to the purchasing of sale or stocks or investing in corporate bonds. Information reported in the document includes company history, overview of company operations, organizational structure, compensation to the executive team, financial statements, subsidiary information, earnings per share, and risk factors. Starbucks' SEC 10-K form for tax year 2018 is composed of 5 parts. Part 1 contains information about the overview of the business, properties, disclosures, risk factors, and legal proceedings. Part 2 is a report on selected financial data, audit information and accountant disclosures, disclosures about market risk, and other miscellaneous information. Part 3 includes information about governance, corporate structure, and executive compensation. And Part 4 contains exhibits, financial statement schedules, and executive signatures. The 2018 SEC 10-K for Starbucks resulted in 102 pages of detailed financial information that investors might want to know prior to investing in Starbucks. This slide shows the highlights from Starbucks SEC 10-K fiscal year end 2018. Revenues increased 10%. Global store sales grew by 2%. The fiscal operating margin got smaller, compressed, due to some restructuring, salary increases, and changes in infrastructure. Restructuring costs increased dramatically. Earnings per share increased. Net cash flows increased, but capital expenditures also increased. And shareholders had a win. Looking at Starbucks' income statement, balance sheet, statement of cash flow, and SEC 10-K statement on record reveals important information about the company's health. Reviewing these financial statements from fiscal year end 2019, it appears that the company is losing money. However, comparing each statement over a span of years shows that Starbucks' financial health is sound. Investors looking to buy stock would have a safe bet in Starbucks. Would you invest in Starbucks? We would. Mahalo for watching our presentation.